Hello everyone, how are you all? Welcome back to Dr. Labib Academy. On behalf of Dr. Labib Academy, I'm Dr. Labib addressing you. In this session, we are going to cover F8 Audit and Assurance. I kindly request you all to see this video till the end, subscribe it, press bell icon so that whenever I am going to post new videos, now it is on the regular basis I am doing this, and if you subscribe the channel and press the bell icon, you will get notification the moment I will post it, so that it will help the students community of ACCA who are aspiring to succeed in this course. And from my side, the total contribution is with you. Okay, so I kindly request you to see till the end and subscribe this channel with bell notification. Okay, and any comments, any suggestions, you are welcome to write in the comment box. Those suggestions will be taken into consideration, and definitely there will be an improvement, there will be a change, there will be a difference. The only purpose is we have to reach to as many students as possible who are aspiring to become ACCAs, and our contribution will make them to prosper. Coming back to this, what we are going to study in this session. We discuss in this session. We are talking about the audit and assurance. Okay, and audit and assurance is so many people have given me a request to come up with some video with respect to what? With respect to substantive procedures. This is one of the important topic which is going to be there in the examination. Is it one of the important topic that is going to be there? Every question paper will have one question on substantive procedure. And it's not difficult. This is the way I will say every time. Nothing is difficult. You have to think, you have to understand, you have to be very clear how we are going to work it out. Before going to substantive procedure application, we have to understand this question. This is for a old model, 2 marks. I am taking this because I want to explain you the concept as such. That is the reason I taken this as a reference before coming to the main question. What they say, auditors are required to obtain sufficient appropriate audit evidence. This is the language which we have to use in this paper. Sufficient, appropriate audit evidence. Sufficient, that's very, very important. How sufficient, how appropriate, this is the audit evidence. In this case, when we are working on these areas, we have 2 things. One, we are talking in terms of test of controls, and the second, we are covering something with respect to substantive procedures. We can use these 2 things. Test of controls, we will have controls, we have to test those controls, whether those controls are effective or not. And subsequently, we are talking about substantive procedure. Most of the students will have little bit doubt how best we can differentiate it. We have to make a clear differentiation between these 2 concepts. What the question says, they are talking, they define a test of control and substantive procedure. We are taken 2. I have taken this from the books only. Okay, I have not taken any. I have not added anything from my side. I have taken it from the source, and I am just reflecting it through it. That's all. Very simple. What is the test of control? See, we will have the controls. We have the controls. You, as a matter of fact, you will have controls at every stage, every process. Fine. You have a control. You are writing you are raising a invoice. You are raising a invoice. When you raise the invoice, one person will prepare and one person will verify. One person will approve. Fine, like this. When you are receiving the goods, fine. When you are inventory, when you receive an inventory, what will happen? One person will verify. Is it? One person will verify. One person will receive. One person will take down in the register. It means I'm giving a small examples where what is the basic concept with respect to control. That is what it says. What the rule says, test of we have to test whether the controls are there or not. Whether somebody is preparing, somebody is verifying, someone is approving or not. Test of controls are provided to what? To obtain evidence about the what we are doing here. We are which evidence we are focusing? We are focusing on operating effectiveness of controls, whether the controls are effective or not. To why we are doing this? As simple as possible. We want to prevent, we want to detect, and subsequently we are going to make the corrections if any. At the assertion level, as simple as that. At the level it has been happening, is it? At the level it's happening. We should not say that yes, we will do it at a later stage. No. Means what is the test of control? Very important. I am putting one star mark here. When you will come in, it says somewhere they will put a application and they will ask you a question on this. Yeah, test of control is nothing but to obtain the audit evidence about the operating effectiveness of the control. Well, to prevent, to detect, and to make corrections. Fine. This is where we are talking in terms of test of control. Coming back to this, what is the substantive procedure? See, we want to know substantive procedures means is in simple terms, we are just going in detail. We are going in detail about each and everything. We cannot rely on one task and say that yes, it is fine. We have to see for one task what we have to do. We have to think from different angles. We have to think from different aspects, as simple as that. Different perspectives. When we are taking into consideration different perspectives, definitely we will make it sure that is there any we are doing why we want to do. We are doing this only to make sure that we have to detect material misstatements. Material misstatements means definitely material means in terms of what? In terms of value, in terms of amount, is it? In terms of value, in terms of material. That's what misstatements at assertion level. When say assertion level, boy, what are the things? What is the substantive procedure? We are working with detail of classes of transaction. We are working on the details, as simple as that. We are not just having we are just not working on one or two aspects. Is that? That's what I told you. We are talking in terms of details from different aspects. Now, what is the substantive procedures? We are talking in terms of account balances. We want to know what is last year. Yeah, what happened? What is the last year? What is the current year? What is the last month? What is the current month? We are talking. We have to go into. We have to do an audit procedures with respect to the account balances. And if we want to do what is the analytical procedures, right? Analytical means again what we are doing, how the performance has been there in the last year, what is the performance is there in the current year. What is the we are making an analytical procedure. What is the firm's performance? What is the firm performance? And we are comparing with respect to what is the industry performance, industry standards, industry yardsticks. Okay. We are taking into consideration this is the most important concept. Please make it sure. I am putting in both the cases, I am putting one star mark. Okay. Test of controls are performed to obtain the evidence, whereas substantive procedures are the audit procedures to perform the detect the material misstatements at the assertion level in terms of detail of transactions, in terms of accounting balances, and whether they have disclosed it or not in the financial statements, financial reports, notes to the accounts, disclosures in terms of notes to the accounts. Right? These are the two basic things which are very important. Take my word, it makes the difference. So don't miss this one. Make it a note, and before before every day till the examination, make it sure that you have to work on this. Now, what is that? There is a question with respect to examination question, March and June. That much introduction makes a real understanding about what we are doing. Now, wherever it is possible, additional information is there. I will just add up the thing. You are an audit manager of Cranberry. You are working as for an audit firm, and you are currently responsible of the audit of Gooseberry. This is your client, a company which develops and manufactures health and beauty products. See, knowing the entity is very important. This is one of the features of control environment. Is it knowing the entity? That you should know the entity. You should know the firm. In examination also, this is the moment you are talking in terms of knowing the entity, you will automatically get an idea. These are the things that means we are talking about health and beauty products. Think from the health and beauty products only. What in this type of industry, what are the things which has to be taken care of? We will distribute to whom they distribute these to the wholesale customers. Means they are dealing with the whole. It draft profit and loss, profit before tax 6.4, and total assets are 3.7. See the things. I am giving you a hint here. When they say it is a profit before tax and this is total assets, if this is given, this type of information is given in the question, means it is taking into consideration materiality. Materiality says that how much is the 1% of profits. Is it? Material said that it is 2 to 5% of total assets. 1% of it is 5% of profits. It is 5% of profits. It is 1% of sales. It is 5% of profit. Means automatically the moment we are taking into consideration the materiality factor, that if this information is given, it's by default think about that. There is no other reason why they will give this information. The final audit is due to commence shortly, and the following matters are brought to your attention. Okay. Now we will take that profit before tax and total assets. Now what they say. See, people are requested, people have told that we would need substantive procedures, and literally it is little bit difficult compared to other, because you have to be very specific. But once you go through this video, I will assure you that you will have a clear understanding about what we are doing. There are three things. One is related to research and development, one is related to depreciation, and one is related to bonus. Okay, there are three things. And the next part is we are talking about in terms of issue on audit report. 5 marks each. Okay, each constitute how much? 5 marks. Now, when we do the things, first you see, I told you in the beginning, first you know what is the requirement. This is the standard way of, see, even if you follow the ACCA guidelines, instructions, they say very clearly that first go through the question paper and what are the requirements. Don't just read the scenario. If by reading the scenario, we will not get anything. You see what is the requirement. Once we are talking about the requirements, automatically we are going to focus on that. What is that? They say that describe the substantive procedure auditor should perform to obtain sufficient and appropriate audit evidence with respect to what? Research and development. Fine. Now, when we are talking about research and development, fine. When you are talking about the research and development, make it a point. The rule says what are the basic conditions. Research expenses. Is that research expenses or research development? See, we say it is a development cost. We say it is a research expenses. Whenever that is the way the terminology we are using. This is going to be expensed. Is it? This is going to be shown in the income statement, whereas development cost will be capitalized, and definitely it will be going to show in the statement of financial position. Yes, statement of financial position. This is the basic understanding which we have to, the moment I am using purple color, okay, the moment I am using purple color, it means it is little bit, we have to be very close, we have to be very specific on that. Fine. Now this is the point of understand. Now what is a substantive? We have to have a sufficient appropriate audit evidence with respect to research and development. Now research and development, research means it is an ongoing process. Development means once research succeeds, you are successful, then we are going to the next stage with respect to the development as such. Fine. That is the because how we have to think about the research and development. It is in details. What they say, focus on that. What is the concept? Detail of classes of transactions, account balances, and analytical procedures. Based on that only we are going to work it out. So what we are doing. Whenever you are doing a research, anything, any asset, obtain and cast schedule. We have to get the schedule of what? Intangible assets. The first thing is what, as an auditor, the moment you go to the client place, what you will do? You will have an audit plan. You know what are the tasks you have to do. If they have been assigned for a research and development, obtain and cast, make a total of schedule of intangible assets. What we are doing? We are talking about opening balances, whether opening balances, closing balances and opening balances has been carried forward correctly or not. We are talking about which amount has been capitalized in the current year. How much amount has been capitalized in current year? Yeah? How much is the development cost? Yeah? How much is the development cost capitalized in the current year? And amortization, how much it has been written off. Yeah? How much has been written off, and what is the closing balance. Very structurally, what it says, we are talking obtain and cast the schedule of tangible assets, getting the opening balances, identify the amount which has been capitalized. We are thinking how much has been written down, and what is the closing balance. It's very easy to make it a point. Okay, first thing. Second thing, agree the closing balances, general ledger. Fine, you are using the closing balances in the general ledger. We are talking in terms of trial balance. We are talking in terms of draft financial statement. What has been said? They are given you a very clear that final audit is due to commence. Fine, final audit is due to commence shortly. When final audit is due to commence shortly, it is the definitely we are still in the process. This is the first point. This is the second point. And discuss with the financial director. What they say, see the thing. In this way, gross pay is spent 1.9 million in the current year. 1.9 million in the. They say that developing 9 new health and beauty products which are at different stage of development. Once they meet recognition criteria as Y38 in terms of intangible assets for development, Gooseberry includes the cost incurred with intangible assets. They say that they are in the process, they spend how much? 1.9 million. This 1.9 million is going to be how they have spent it, how much is on the research and how much is for the development. Classification has to be done in detail, in clearly. And once production commences, when we'll start production? We'll start production once the development has been completed. The intangible assets will be amortized on a straight line basis over the period of, they say that the life of the product is 3 years. Fine. Management believe that this amortization policy is reasonable with respect to useful life. We are talking about health and beauty products. Fine. Health and beauty products, definitely there will be a lot of research will be done all the time. Yeah, a lot of research has been done. You are talking about Nivea, you are talking about L'Oreal, you are talking about so many products are there. Very simple. When I am teaching you this, I have to give you all the clear cut, the basic examples. Fine. We are having a lot of brands are there where there is a lot of research and development will take place. Yeah, and definitely it is not a long period. It's not like the chocolates where we are talking about Snickers and Bounty or we are talking about these things, Cadbury. We are not talking about at longer period. We are talking about beauty product, health and beauty products always have a new, they will launch products at a very quick frequency periods. As the industry, the constant demand for innovative products. Right? Now, the first point and the second, what is the third point? When we say it is a 3 years, when it is 3 years, discuss. Always you have to these are the key words. We have to obtain, we have to agree, we have to discuss. We have to discuss. What we have to do? We have to discuss with the director what is the rationale, what is the assumptions, what is the reason, justification for a 3 year, why it is going to be a 3 year useful life. And you have to give it a reasonableness. This is the third point. What is the fourth point? Substantive procedures. You have to recalculate. You have to do again recalculate. Maybe in that case we are convinced in one area. We have to cross check from every different aspect. Recalculate the amortization. How much you have been writing off on the sample of intangible assets, which has commenced production, and confirm with the what is the policy. Whether they are writing down the value of intangible assets as per the policy that has been defined and framed by the company over a 3 year period, and amortization only commence from the point of production. Fine. Now, what is the fifth point? For the 9th project, discuss with the management for each project along with us what is the stages. You are having 9 different projects. Is that you are having 9 different projects? Definitely 9 different projects will be at the different stages of research and development. You have to discuss, is that, and management knows this, that yes, these projects are in completion stage, these projects are in the middle stage, these projects are the initial stages. Yeah. The when we make the point as such, we'll get the clarity about the what is the stage of development, whether it will be shown to be capitalized or see research cost has to be expense till it is not going to be successful. Okay, once it is successful, then only it will go to the development stage. Next, point number 6. For those expense as research, that's what we are saying. Yeah, for those, this will never change. Fine. Agree the cost incurred to invoices and supporting document. Definitely, if you are doing the things, you have to support with the documentation and invoices, and it has been included in profit and loss account because research is going to be treated as a expenses. Point number 7. For if we are talking about the one side, we are talking about the research, we are dividing, classifying it in detail. For which one is capitalized as development, agree to the invoices, and we have to get a technical feasible by discussion. If somebody has to approve whether it is capitalized or it is on what basis we are going to capitalize it, what is the say, discuss with whom. We are not discussing with the directors, we are discussing with whom? We are discussing with the development managers, or what is the fees, or review the feasibility reports. Next, point number 8. Review market research to confirm who has the ability to sell the product. Once, see, that's very simple. You have done research. We have done research. It has been went to the development. Is it right? It has. See what happens. It have the most. Then we say it is going to be in an asset. What is the asset? It should have what? It should have an economic benefit. That is where we are talking about an asset. You should have a future economic benefit. When we have the economic benefit, then only we can be successful. It will add value to make sure that it has the ability to sell the product. Right? It's not like just we are doing the research and we are just dumping the product in the shelf. That will not happen. And what it says very clearly that review, ultimately, lastly, review the disclosures, whether we have done, verify that we have done as per the IS 38 of intangible assets. Fine. This means a simple way of putting the thing. For what they say, first you have to agree, discuss, recalculate. Again, we have to discuss with the management, which has been expense. You have to agree the cost for those capitalized as a development. Again, we have to agree the cost, review market research, and review the disclosures. This is a simple way of putting the substantive procedure. This is not difficult at all. It's only the way how we are going to approach it. Fine. Coming back to this, we will complete this and we'll stop completely. All the complete question is that what depreciation. Gooseberry has a large portfolio of property plant. In 2007, the company carried out a full review of PPE and updated the useful lives, residual values, and depreciation. Some way they have done with it. We have to get the message, revaluation, and methods for many categories of assets. The finance director felt the changes were necessary to better reflect the use of assets. Okay, fine. This resulted in the depreciation charge of some assets changing see when you have any policy, is it? When you have any policy has to be uniform to all assets. You should not be no selective criteria. Right? No selective criteria. We are revaluation. We have to do. Otherwise, what will happen? They will be in what will happen in that case. They will have a inconsistency. If there is a inconsistency, definitely there will be a problem with comparison. Is right? There will be a problem with a comparison. So that's what it says. Describe the substantive procedure the auditor should perform to obtain sufficient with respect to depreciation. We have covered research and development. We are covering the property, plant, and equipment. Again, we'll cover some more substantive procedures. It will. What we are doing? We are saying that there is a change in the useful life, residual values, depreciation, and this has been done by whom? This has been done by the director. This has been done definitely as per the instructions from the management. What is the substantive procedures we have to do? The first one, discuss with the management what is the what is the rationale changes in the property in terms of rates, in terms of life. You have to discuss. Then they will give you a clear instructions about what is the reason behind doing this and ascertain how these changes are varied. Second one, confirm whether the reasonable of these changes. We have to know whether the changes has been done with proper justification by comparing the revised depreciation, because we have changed the depreciation rate. We have changed. See, whenever there is a change, definitely depreciation rates have been increased, expenses will increase, and profit. What will happen because of this? The expenses either will increase or will decrease, and automatically what will happen? Profits will increase or profits will decrease. Yeah? That's the way. And how we are going to compare with the industry? We have only one source. One of the sources is what we have to have compare. If you are talking in terms of automobile industry, take the automobile company, take the another competitor. If you are talking in the of airline industry, airline company, take another airline company. What they are doing and what we are doing, whether we are in line with the industry standards or not, industry average, and knowledge of the business. Third one, it says that what are the things? First we are discuss, then we will confirm, and next we will review. Review the expenditure for the next few years to assess whether the revised assets. See, when we are saying revised lives, is the life of the asset. When we are talking about the life of the asset, life of the asset is increased or life of the asset is decreased, definitely it will happen. It will have effect on what? It will have effect on the replacement of asset. In that case, you should have that there is a sufficient capital budget, capital expenditure budgets is there for the next year, whether the revised lives of planned period until there is a replacement of relevant asset. Means you should have a complete whether we can, if we are saying increasing or decreasing, the capital expenditure budget has to be there. What the we say that review the non-current asset. This is the first and primary source of documentation, that is the non-current asset register, whether the revised depreciations has been applied. Means you have to change. If you are changing at one place, we have to change completely in each and every related books as such. The master file, if now we have a concept of master file, when we make changes in master file, it will be done across all the related accounts as such. Now, what is the point number 5? Review and recalculate profits and losses. In terms of what? Industry, definitely there will be revaluation, the change in the assets life. Is it right? When they change in assets life of the asset. What will happen? Definitely, if the asset life has been shortened, definitely we will have a disposal of assets. Yeah, some assets will be scrapped in the year because of the management decision. Yeah, because of the management, you should know the reasonableness of that's the reason. If depreciation rates have been changed in middle of the asset life, it will have a very significant impact on the financial statement. What is the point number 6? Select a proper. We are not cannot do each and every asset, property, plant, equipment. Select a PP1, any property plant sample of PPP. Recalculate the depreciation charge to make sure that it has been done as per the non-current asset register, and ensure that the new depreciation rates has been appropriate. Fine. Select a sample of property, plant, equipment. Recalculate the depreciation, and we have to compare with the ensure that it has been done with respect to the non-current asset register, and new depreciation rates has been applied. Now, point number 7, what it says: obtain a breakdown of some assets. Okay, obtain a breakdown. You will have asset A, B, C, D, E, F, G. Is it? You are not take one asset C, and compare what happens in the previous year, what happened in the previous year, what happens in the current year. This is one of the standard substantive procedures. See, only thing is, what if you ask me, you understand these points and fit these ideas in most of the different substantive procedure questions. Here you will get an idea, and this will have a replication. Prior years, and whether significant, if there is if it is a really significant changes is there, then you have to discuss with the management. In terms of what previous year we have taken depreciation is 100. This year the depreciation is how much? Depreciation is 750. Then definitely we cannot say that if there is a huge gap in the depreciation amount, then there will be a question mark why it has been happened, and we have to immediately discuss with the management whether the change is reasonable. Point number 8, for assets categories which has been a minimal number of additions and disposals. Some assets, you cannot have every asset will have a change. Is it? Whichever assets have a minimum number of additions and disposal, they compare what to the total calculation of depreciation charge. And if you find any changes, any differences, any changes, automatically what we have to do, we have to discuss with the management if significant fluctuations arise. Last one, what it says review the disclosure. Again, before we close down the things, we will review the depreciation charges and policies in the draft financial statement, and we say that it has to be as per IAS 16. It has to be as per International Accounting Standard 16. Now you can understand from this, we have to make sure that what we are doing, just a recap, discuss with the management. We are talking about confirmation. We are talking in terms of review the non-current register, review and recalculate the profits. We are selecting a sample of assets, property, and recalculating the depreciation charge. We have to get the appropriate breakdown, and for assets which has been with minimal order number of additions and daily disposals, we are performing a proof of total calculation. And the last but not the least, review the disclosure of the depreciation charges. Fine. This is a standard a structured answer for depreciation with respect to substantive procedures. Coming back to this, what they are saying, they are talking in terms of the next another substantive procedure where they are taking into consideration the bonus factor, right? Now, what I first make it a show. Even sometimes I will describe the substantive procedure the auditor should perform to obtain an appropriate evidence in with respect to direct bonuses. Right? Now, go to the scenario. The company board is comprised of 7 directors. They are entitled to a bonus based on the draft year-end net assets excluding intangible assets. Details of the bonus entitlement are included in the director's service contracts. The bonus which are related to 2008 was paid in year-end. The related to 2000 year-end was paid to each director in February 2008. Fine. Okay, fine. And the cost occurred and recognized within the wages and salaries. Separate disclosure of bonus by director is required by the law. What is the local rule says? Where if you are giving it to the directors, local rules, regulation, legislation says that you have to make a separate disclosure. Fine. Now, detail of transactions, accounting balances, disclosures, analytical procedures. 4 points we have to always keep it in mind. How we have to do? The first one, we have to obtain a schedule. You have to obtain the schedule and you have to cast. Cast is nothing but we have to total the schedule to ensure that why we are doing the totaling, we know to make sure that there should be accuracy and we are agreeing the amount with the financial statements. First you have to get the schedule, total the things, and we have to agree with the financial statement. Second thing, what you review the current liabilities and confirm bonus accrual is included. See, it is happening. See, we are giving on immediately. When we are paying off immediately, we are December we are carrying forward in the month of February. Right? Then what will happen? It has to be included in the current liabilities and confirm whether it has been there or not. Third one, what it says, agree to individual bonus payments. We have to take 1, 2, 3, 4, 5, 6, 7 directors are there. 1, 2, 3, 4, 5, 6, 7. 7 directors. Take individually and do total. Take individually and do the total assets so that there should not be any the individuals, this total and this total has to be recalculate the bonus payments. Agreed that whatever the criteria is there, based on that again we do the recalculation, including the exclusion of intangible assets. The condition says that they have to exclude the intangible assets to supporting documents, and what is the rate of percentage is to be paid to the with respect to what? With respect, two things are there. We have to make sure that and they are paying the things as per the service contracts, and they are doing it by excluding the intangible assets. We have to know whether we have done as per the criteria or not. Next, what they say that point number 5, confirm amount of each bonus paid post year end with the cash book, whether what is the amount has been returned and how much it has been there in the cash book. Next, What is point number? Agree the amount paid per director as per the board minutes. Fine. You will have the board minutes, but it's a higher up decision to make sure that what happened mentioned in the board minutes and how much amount we have paid to that to ensure that sums included in the financial statement are fully accrued and disclosed. Disclosure is one of the substantive procedures factor. Now, what it says, point number 7, review the board minutes. Board minutes, see, these are the decisions. When you are talking about the thing, review the whether any additional payment relating to this year has been agreed for any directors. Review the board meeting, and board meeting will give complete minutes that to whom how much we have to pay and how much we should not pay. Now, most important thing, obtain a written representation from the management. Completeness of what? Completeness of director. We have everything in documentation, but get a written confirmation is having more reliability. Written confirmation will have more reliability. That is the reason we have to get. And last but not the least, we have to review the disclosures, whether we have done as per the compliance with local legislations. Now you can see the structure of all three substantive procedures. All three substantive procedures are in line with the same flow. With the same flow as such. Okay? Any doubts, anything is there? Just put it in the comment section. It makes things easy. Again, for your understanding, review the disclosures, obtain a written representation, review the board minutes, agree to the amounts paid. These are things, confirm the amount, recalculate the bonus payments, agree to the individual bonus payments, review the schedule. These things obtain a schedule. Obtain the schedule as such. It makes real difference as such. Okay. Last one. What it says. What is first you go through the question. What is the question requirement? In the examination also. See, I will give you the tips for the examination in between. In the examination also, first go through the question first. Then we will see what is the. Then you can relate it to the scenario. Discuss the issue and describe the impact of the auditor, if any, should this issue remains unresolved. We have to discuss the issue, and if it is unresolved, what we have to do. It is with respect to auditor's report. One question will be there on this. Fine. One question will be there on auditor's report. Fine. You just list down the things. Fine. See till the end and subscribe to this channel and press bell icon so that it will get notifications as and when I will post. Okay, as and when I will post. During the audit, the team discovered that the intangible asset balance includes how much? 440, related to one of the beauty product developments, fine, which does not meet the criteria of capitalization. As this project is ongoing, see what they say, the deemed intangible assets balance 440, one of the 9 projects, development projects, which does not meet the criteria means, which is not meeting a criteria means still it is in the research stage. Once research stage is completed, then only we are going for a development. As the project is ongoing, the finance director suggests no adjustment is made in 2008 financial. She is confident that the project will meet the criteria. Okay, you are confident. It's not the individual that It is not that you are talking about the individual judgment. Is that you are confident, but it has to be on paper. Fine. What the issues discuss? What discuss the issues and describe the, if any, should remain. What it says means what we have to do when we are doing the things. We have to make. They have given us what? They have given us profit before tax. Is it? They have given us profit before tax. They have given us the value of net assets. They give us the value of net assets, and they gave the value of what? They gave the value of the intangible assets. Intangible assets is how much? 0.44 million. Okay. In the profit before tax is how much? They gave you in the scenario in the beginning. How much is the profit? 6.4 million, 37.2. Is it? Here how much they gave? This is 6.4 million and this is 37.2. This constitute what? This constitute the materiality. Yeah, this constitute the material. We have to see when you are talking in terms of profits, the range is maximum 5%. We are talking about the sales, the range is maximum 1%. We are talking in terms of net assets. Is that the range is it deals with 2 to 5% as per the ACCA guidelines. Okay, as per the ACCA, what it says, what we have to do. What is the impact? The impact on auditor report 1. We have first what we have to do. See how the procedure we have to calculate. Is right? We have to calculate the things with respect to the profits. Okay, with respect to the profits. First you have to do it separately. What will happen? You have to take intangible assets. Intangible assets divided by profits. Profit before tax is at 0.44 divided by 6.4 million. How much is there? It comes to 6.9. See the things. What I told you, if it is more than 5%, it is material. It is more than 5%, it is material. Next, with respect to assets, is that with respect to assets, how much is the assets? 0.44 divided by 37.2, it comes to 1.2%. Fine, it comes to 1.2. That has been given here. That has been given 6.9 and 1.2. Based on this, we have to do calculations, and calculations should, based on the calculation support, we have to write the discussion on that. Discussion means you have to support, you have to discuss what are plus and minuses, all those things. Right? You have to discuss how it is. You have to make an interpretation. Impact on auditor's report 1. New health policy Gooseberry has developed. The year does not meet the recognition criteria of IAS 138 intangible assets. But has been included within the, even it is not fulfilling the criteria for intangible assets, IAS 38 we have included in intangible assets. This is contrary to IAS 38. Criteria not met, and project is research expenditure should be expensed to the statement of profit and should not be capitalized. Once you are going through this video, whatever is happening, just keep it in mind. It makes sense and you are not going to forget about that. The error is material. Why? The reason. It is how much? It is 6.9% of the profits and 1.2% of the net assets, and hence management should adjust the financial statements. By removing this amount from, means it is material. It is material and it has to be adjusted. We have to exclude it. We should not capitalize it. It has to be expensed. And we should not, otherwise what will happen? If we are going to expenses will increase and profits will decrease. Right? It is incorrect. It is incorrect. Otherwise, what if you are going to make sure that should not be adjusted financial statements. It is removing this amount from the intangible assets and charging it to what we have to do. We have to we should not capitalize it. Right? We should not capitalize it. We have to make an expenses. Research is expenses and our profits will decrease. Now, if the project meets the recognition criteria in 2000, then only the point can any new cost income. If it is going to fulfill that criteria next year, that's fine. We'll take that into next year. That is the basic reason. If management is doing fine, that's good. There's no issue at all. If management refuses, what is the auditor opinion? Auditor opinion has to be modified, changed. As manager is not compiled with IS 33, the error is material, but not pervasive. It is material. It is material. It is one time. Okay, it is one time. It is material. And then what we have to do? You have to give a qualified opinion. If the management refuses to make any changes. What is how we have to present the qualified opinion? A basis for qualified opinion will be needed after the opinion paragraph. It should not be before, is it? It should be after. The opinion means we are putting it in the end. Okay, we are putting it in the end. Which means it is only one related to only one type of activity. Would explain then in that opinion, qualified opinion, we are talking in terms of material misstatement in relation to the incorrect treatment of research and development and its effect on the financial statement. What we are doing, here students will find little bit challenging. I will not say difficult, I will say challenging. Only except for this, other things are fine. The opinion probably would be qualified except for. Other things are fine, is it? Means only the problem is here, that's all. Whereas other things are as per the requirement. Fine. This is the we have covered what we have done. We have covered, first we have talked about what is the test of control and substantive procedure. Subsequently, we are taking the substantive procedures of research development, substantive procedures of depreciation, and substantive procedure of bonus payments. And what is the things with respect to the auditor's report. Hope this will help you, and this is very important concept from the examination point of view. Any comments, any suggestions, comments, place it on the comment section, and I expect you that you share it, subscribe it, and press the bell icon. Thank you so much. Best of luck.